Hello and welcome back. In this video we are going to continue where we left off in the previous two videos, and if you haven't already watched those, please do so, because the terminology that I'm using in this video and the following will make more sense. Okay, so last time we talked about an auction and why prices move, and that prices ultimately move due to people who are willing to pay different prices and the current market price. And the auction example is a very good example for illustrative purposes, and it makes, in my mind, it makes very good sense. And last video we talked about how we can identify areas in the market where we can see where people are willingly going to buy or sell a given commodity. In this situation, we are going to be looking at the Bitcoin American dollar. Okay, so if we have a look at this. In the last video we talked about apparent areas of supply and demand and children, and this brings us to our next topic, is how to identify high probability turning points in the market. And as you see here, price is moved lower here, and now we're slowly wriggling higher. So what you need to do is you need to identify candles like this. This is the one that's most the closest to price, and so this is the one we're going to focus on. So what I like to do is I like to mark off the highest high of the pullback. So you look for a candle that left an area. You can see that price moved sideways and then price moved away very quickly. We gap down here, and I want to mark off the high of the area of a short position accumulation, which is what this is, because this is very important to us. And so then I go to a smaller time frame, and I am going to look inside this price action and see what exactly is going on. You can see here we mark this off. This is the line that we put here, and we have this little area of accumulation. You see these white candles. This is accumulation, and accumulation is ultimately areas in the market where liquidity is being distributed, either to move price higher or lower. And you can see that we had price moved higher. So we have this. I'm just going to mark that off like so. So this is an area of demand. Price rallied, accumulated, rallied, and now price drifted off. And you can see price came back to it once, twice. We poked into this area here, and we accumulated. Accumulated to do what? To move price lower. Price broke away. We tested the edge of this area, this period of accumulation, and then price moved lower. And currently price is just here. And so you want to identify areas where we think price is potentially going to move. And you can see that if we remove this, you can see this is actually, if we go back to the daily chart, this is actually where price returned to. Just here you can see price left, and it poked up, and then it went down. So this is where price returned to in order to find sellers to move price lower. So we go back to the hourly chart, because this is interesting for us. We go back and we find out where we are. Here we are, and you can see this is where we are. So price left, we moved higher, and then we started to move low. We didn't depart from the area as quick as I like, and so this is not one of the better areas that I think that makes for a very good entry. But what I do like is this area above. So I'm going to move this higher like so. So price came down. We moved sideways for a little bit. We were accumulating orders to move lower. Then we cut down lower, and price moved up, and then we started to wriggle. So what I'm going to do here, because of this piece here, I'm actually going to move my line up to here. We're going to leave this price level on there. So this is 79.21, and until we get to the next video, price may or may not come back there. But ultimately in this video I wanted to share with you a very important step, and that is looking for the area that price returns to before it releases. And it's going to look like this. The price comes up to an area, we kind of move away, we go higher, we kind of move sideways, we leave, then we move higher, and then we go down. And so what you want to focus on is you want to focus on the price level at which price left from, okay? Because this is telling us for supply, this is the beginning of the sell zone. So we have the sell zone beginning here, and for demand, price does the opposite. It moves down, accumulates, moves down, moves up, comes down, and then moves higher. So this is the beginning of the buy zone, because price was able to move away from this area. So there was a liquidity available in this area that was enough to cause price to move away, and that's what we're ultimately seeing here. How price came down, we pulled back a little bit, and then price started to wriggle down. This is not the best one, simply because price did not depart very quickly after it moved higher. But what I do like is this one here. I'm just going to double this line like so. This is a little bit more interesting, how price came down, we moved sideways, we moved up into this area, and then price moved away, and we have not been back to this area since. So I'm going to actually mark off this like so. We're going to leave the price, these lines like that. We're going to focus on this one here. So now we're going to leave this, and we're going to see what happens once price moves back up into this area. Hopefully before we have the next video. Otherwise we can discuss some of these areas on smaller time frames and see if we can find something else that looks interesting. Good. Well, I will leave it at that for the time being. If you haven't already done so, please subscribe to the channel to get updates about this video and other videos as well. And I will see you in the next video. Thanks for watching.